We all know credit quietly powers the modern economy. In the next few minutes, we'll decode what credit is and why it drives modern life. We'll trace it from clay tablets and trade routes to interest, risk, and reward, the mechanics behind loans, cards, and mortgages. You'll see who steers this system: banks, central banks, and the institutions that govern trust. Most importantly, you'll learn how to use credit to build your future, not a burden. Stay with us, because understanding credit can change how you see money forever. Before we begin, a quick primer on credit: what it is, why it matters, and who shapes it. In this video, we'll uncover what credit really is, how it began, why the world shifted to it, who controls it, and how it became the hidden power behind every economy. Stay till the end, because understanding credit might just change how you see money forever. Welcome! In the next few minutes, we'll unpack what credit is, where it came from, how it works today, and how to use it wisely. Stay with us. This will transform how you see money. At its core, credit means trust. It's the ability to receive something of value today with the promise to pay it back later. Every time you use a credit card, take a loan, or buy now and pay later, you're using credit. The word credit comes from credere, Latin for to believe. It's built on belief, the belief that the borrower will repay. That belief is the foundation of every modern economy. Credit is older than money itself. Around 3000 BCE in Mesopotamia, farmers etched debt records on clay tablets, promises to repay grain or silver after harvest. In Babylon, the Code of Hammurabi set official rules for interest and repayment. By ancient Rome, credit financed construction, trade routes, and wars. And in medieval Italy, cities like Venice and Florence pioneered letters of credit, letting merchants trade across continents without carrying gold. Credit turned trust into currency, long before paper money existed. To understand how credit works, imagine this. You borrow $1,000 from a lender at 10% interest. That 10% means you'll owe 10% of $1,000. That's $100, in addition to what you borrowed. So you'll pay back $1,000 plus $100, $100. That extra $100 is the cost of borrowing money, and it represents three things: time, because money today is worth more than money later; risk, the chance you might not repay; and reward, for the lender taking that risk. This is how all interest works, from small personal loans to trillion-dollar government bonds. Now, how do lenders know whether to trust you? That's where credit history comes in. The first formal credit reporting system began in the United States in the 1950s, when lenders needed a way to assess borrowers objectively. Before that, loans were based on personal relationships or social reputation. In 1956, the Retail Credit Company, now Equifax, started collecting payment data on individuals. Soon, Experian and TransUnion followed, creating the modern credit score, a numerical reflection of your trustworthiness. Your credit history became your financial fingerprint, determining who trusts you and at what price. The modern credit systems we use today have deep historical roots. Loans go back to ancient Babylon, but structured lending through banks took off in the 14th century, when Italian bankers funded trade voyages across Europe. By the 17th and 18th centuries, banks in London and Amsterdam were financing governments, exploration, and wars, shaping the first global credit markets. Mortgages, or dead pledges, appeared in 12th century England, where land or property was used as collateral for loans. This idea grew over centuries into the modern mortgage system, giving ordinary people the power to own homes, and creating vast housing economies in the 20th century. Then came credit cards. the biggest leap in personal credit. In 1950, the Diners Club card let businessmen dine without cash. Soon after came American Express, 1958, and Bank of America's Bank Americard, 1958, later renamed Visa. These innovations made borrowing instant and personal, a swipe of plastic for a promise of repayment. By the 1980s, credit cards, loans, and mortgages had spread worldwide, embedding credit into everyday life. So why did the world move from physical cash to digital credit? Because credit creates growth, faster and cheaper than cash ever could. When a bank issues a loan, it doesn't move old money from one place to another. It creates new money, digitally, as credit. That new credit fuels homes, startups, and economies. But here's another reason. Printing physical money is slow, resource-intensive, and limited. It requires paper, metals, logistics, and government authorization. Credit, on the other hand, can be issued instantly, at the speed of belief. Banks realized that creating digital credit was far more efficient than producing cash, and it allowed economies to expand endlessly. But credit is built on faith. When that faith breaks, like during the 2008 financial crisis, the entire system trembles. Still, the world depends on it. Without credit, global trade would freeze in a single day. Today, credit power is concentrated in a few global institutions. In the United States, giants like J.P. Morgan Chase, Citigroup, and Bank of America dominate consumer and corporate lending. In Europe, Deutsche Bank, Germany, HSBC, UK, and BNP Paribas, France, control massive international credit networks. And in Asia, Mitsubishi UFJ Financial Group, Japan, and ICBC, China, manage trillions in global loans. But above all of them sits three global players. The World Bank, headquartered in Washington, D.C., lends to developing nations to reduce poverty and fund infrastructure. The International Monetary Fund, IMF, also in Washington, stabilizes global economies by lending during crises, often influencing national policies in return. And the U.S. Federal Reserve, the world's most powerful central bank, controls interest rates, issues currency, and provides emergency credit worldwide. Together, these three form the backbone of the modern financial world. They don't just manage money, they govern trust on a global scale. Credit isn't just about finance, it's about power. Governments borrow to build nations, corporations borrow to grow empires, and banks lend, creating the very money that fuels it all. Credit is belief, multiplied by ambition, and the world runs on it. The real question is, will you understand credit deeply enough to use it wisely, or will you let credit quietly use you? If this opened your eyes, hit like, subscribe, and turn on notifications, because we're diving deeper into the hidden systems that shape your money, your mind, and your future.